Hey everybody, good morning. How's it going? Hope you had a nice long weekend, had some time to relax. I know I definitely missed the markets a little bit of a withdrawal, being away from everybody and being away from the price action. So first I want to obviously talk about the amount of times that we are going to call today Monday. It is not Monday, it is Tuesday already. So that means that the Monday coaching session is pushed to this evening. So I just want to remind everybody that you might not see it on the homepage of the website simply because of the way the calendar works with changing of the date. So I emailed this link out to everybody this morning, but you're probably easier to find it here in the calendar if for some reason you don't happen to see it in the email, but we want to keep making sure that you have multiple ways of finding what you need. So you scoot on over to the calendar and you'll actually see the link over here as well. So I just want to give a heads up. The recent 2 or 3 months worth of coaching sessions, since I really kind of challenged everybody to give me as much detail as possible for things that you are finding to be a roadblock or a challenge or something along those lines, have just been absolutely amazing. So I want to keep that good coaching session momentum going right now and challenge everybody. Had 3 days off, thinking about what your goals are, thinking about what might be holding you back, what you need a little bit more clarity on. Tonight is definitely the time to do that. It could be about charts, it could be about software, it could be about anything related to why you aren't trading bigger, consistently profitable, all those kinds of things. So very big part of these coaching sessions as well. Fully understand that people are busy, no other way to put it. So I want to make sure that you realize that even if you can't attend the call live, very, very important to make sure that you are available by posting, even if you can't attend the call while it's happening. That's no other way to put it. Very, very important. Okay. All right. So we're going to hop right into it. We're going to get into today's news. We're going to get into some ideas heading into next week, which are obviously very important as well. But again, I can't stress the importance of making sure that you allow me to fulfill my promise to you, which is essentially, I promised I'm going to give you custom help. And that really comes down to now you participating and just letting me know what kind of help you're looking for. Okay. All right. So first we're going to start out. We're going to take a look at some of the ideas that you have for the day. And then we're going to break down the daily ticker and take a look at some of the ideas for the week. So actually, interestingly, Ganny's looking at a short sale today. So one of the biggest things we want to make sure that we discuss is there's always a hierarchy of the best ideas. There are ideas that you can consider, which might be a good idea, but good is not what we're striving for. We want to only settle for good if that's the only thing available. So there is a really big distinction when you kind of walk through, here's perfect, which kind of has as many of the parts of the power pyramid in the trade as possible. And when we're kind of looking at this right now and breaking down the idea we're about to look at, I'm not going to say it's right or wrong, because there's definitely reasons to be looking at the idea that Ganny put in there this morning. But what I do want to point out is whether or not it is the best idea so that you can learn going forward every one of the ideas that we take. And I'm going to kind of say something that might sound a little bit weird right now, but I want it to be a very core part of what we do, which is when you lose money, you want to lose money on your best ideas. There's really no other way to put it, because if we think in terms of taking our perfect trades and allowing the edge to do the work, right? Allowing the edge to do the heavy lifting for us. That means that we can't be throwing trades in there that don't match our strategy, because we're essentially pushing out how far it's going to take us to get profitable, how many trades it's going to take us to get profitable, just simply because we're messing up the strategy itself by throwing in those ideas that don't match the edge. Okay, so I just want to be super clear about that. So if we really think about the best case scenario and really good ideas, it requires having the market on our side in the first place. And quite frankly, just to really even make this simpler or more actionable, probably the best way to put it is that the very first thing we should be looking at before we look at any trade is we should be looking and answering the question, is the market obvious right now? That's question number one, because if the answer comes back a resounding yes, the market is obvious right now, then the priority with which we should be looking at new ideas is stacking the reasons we want to find other ideas in the direction of what the market is doing. So right now, again, last Thursday, the market just ahead of the long weekend hit all-time highs. Nvidia blasted through to new levels, and we kind of pulled back a little bit of profit taking, right? Whatever you want to say. Like if we could have scripted this thing out ahead of Nvidia earnings, we were like, man, I hope Nvidia produces blowout earnings. Man, it would be great if the market was at all-time highs as soon as that happens. It's got like this perfect cocktail of everything at the same price. And that's exactly what happened. The challenge that we had, though, is it seemed like the institutions were using that Nvidia bullish move to take some profits ahead of the long weekend. It was just a perfect moment to do that when everybody was looking up and looking to be a buyer. And then all of a sudden, this big, ugly red candle unfolded on Thursday. But it was kind of impressive that the market came back again on Friday, which we actually mentioned that in the daily ticker on both Thursday and Friday, that we're really looking to see what happens to the bulls after getting punched in the mouth, and they're giving us the answer. We're kind of drifting back. Now, I want to be clear about this. If we can't take away Thursday, but we do have to put price action kind of in a box. And for all intents and purposes, we're really kind of in the middle of a 2-week trading range right now. We had good economic data, two different economic points that basically influence what the Fed was thinking or should be thinking, right? Which is economy cooling down a little bit, inflation coming down a little bit. That would imply the Fed is now going to be in position to be lowering interest rates, which is basically what the market has been trading off of for the better part of, I don't know, probably about a year right now. Other than artificial intelligence, it's the conversation around rate cuts that the market is the most desperate for. So if we kind of work our way into this week about what the best ideas are, and in the context of this, obviously moving up one sector, we're looking at technology, right? AI, obviously Nvidia. We're going to talk about a couple of alternative plays this morning. One of them, of course, being AMD. And I think a lot of people are looking at AMD this morning as an alternate to trading Nvidia that's a little bit more affordable right now. Nvidia is up towards $1,100 right now. AMD around 168, 170. More people can probably afford to jump in this one and have a little bit of a greater move, especially if we can move back towards that 200 level. The percentage gain for the risk reward is actually pretty good. So this actually happens to be one of the game plan ideas that we took a look at this morning. Okay. So the other one that I want to talk about, which is a really interesting story, it's not GameStop. We're going to talk about GameStop in a second, is Dell. Dell has just been lights out for about a year and a half. And everybody in our community knows that we have a daily watch list of ideas that are what we might call market leading stocks, or at the very least, leading the way in the hot sector or industry group at the moment. And Dell has kind of snuck up on everybody, where the stock was basically around $36 about a year ago. Let's see, we'll go back to basically about a year ago over here. Yeah, less than $40 about a year ago. And now the stock is pushing $168 this morning. If you do not happen to have Dell on your swing trading radar right now, it is a must watch. Now, I want to be clear. It's a little bit beyond the optimal entry, excuse me, at this particular moment. But that does not mean you should not watch it. Day traders should absolutely be paying attention to it, but swing traders, more importantly, should be looking for the next pause prior to the next push. This is a pretty good move. And you could actually even see from one earnings report to the next, which now Dell is actually scheduled to report Thursday after hours. So I know a few people in the community actually participated in this breakout in Dell over here. And we actually got probably one of the cleanest setups that we could possibly be looking for, which is a triple top, a breakout from the triple top, and then a really good clean pause and a bullish candle before this big move to the upside. So for those of you that are in the camp that breakouts don't work and you're constantly complaining about them, this is one example where that's just absolutely not true. So all you need is one good breakout to follow through to wipe out all those other little pain in the butt losses that we feel like breakouts don't work. I'm the person who always buys the breakout that fails. One trade like this, 130 and change up to 168, pays without any losses. So the big thing I want to get across here is, regardless of your entry setup that you're looking for, we have to stop thinking about whether or not individual trades made or lost money. We have to first be thinking about whether or not it was a great idea, and then allow the larger sample size of great ideas to pay us. The math just works. When you have an edge, which obviously our edge is order flow stacking and the optimal entry, that's really the two biggest parts of what we do. Really, at that point, it's just a question of understanding how to identify stacked order flow, timing your trades with an optimal entry, cutting your losses where you're supposed to, and then obviously using the profit maximizer to squeeze as much as you can out of the winners. The part of trading that people get messed up on, which is what causes doubt, fear, indecision, all those kinds of things, most of those come from the fact that you are either afraid to lose money or you're afraid to make a mistake. And I just want to be super clear about this. If you have an edge, which obviously our edge is solid, right? When the market's obvious, pretty much the entire community makes money. It's not a question of whether or not the edge works. It's a question of, can you not blow it when the edge is not valid? Number one, meaning cut your losses when you're supposed to, pay that business expense, get your capital back, and go to your next idea. And number two is you need to force yourself to have the same discipline on your losses on your winners. And I know a lot of people don't talk about that. It's like discipline, discipline, discipline. And everybody talks about discipline on the losing trades. We need to start to force ourselves to have discipline on the winners. Just one or two winning trades that you hold the right way using the profit maximizer can make all the difference in the world. And I'm going to tell you where it's going to make the biggest difference. Of course, you're going to feel it in your profitable P&L, right? That's awesome. But the hidden place that you really start to feel what it's like to be a winner is because that one or two trades wiped out and paid you profitably for all of those other tiny losses. You're now going to be of the belief that those losses don't matter as long as you keep them small. We're simply throwing lines in the water on good ideas, looking for a few trades that follow through, which basically means even as low as a 50% or even just slightly below that win-loss percentage can be massively profitable if you understand cutting your losses, understanding stacking order flow, and force yourself to learn how and when to use the profit maximizer, which kind of brings us back to this idea, okay? So the idea that we're looking at with Ganny right now does not qualify as a trade that's in the direction of the market. It does not qualify as a trade in a sector that is going up. As a matter of fact, the market is ripping to the upside near all-time highs again, and this particular sector, which is energy, is to the downside. So what I want to do is I want to map out this idea and just really think through, what does this mean for a trade idea, and what does this mean for position sizing? Position sizing is really the more important part of this equation. And what I really, really like here is that Ganny's actually breaking this down, right? Making the argument for looking at a short sale and then throwing other ideas into the mix, what we call in the community building an argument for the idea. So if we take a look first at energy, and if you attended our Saturday game plan session, you know that we were talking about energy being bearish, and we actually even took that a step further, basically saying energy is a little bit beyond the optimal entry. So what we'd really be looking for is the next rally to be shorting energy, which you can see a push down, a pause, a push down, a pause, a push down, a pause, and a push down. So we're really kind of looking at, once it reaches the average true move, which is what it typically does in the direction of the dominant order flow, we then need to let it reset. We need it to reset for a new optimal entry. So if we take EOG and we take a look at this idea, there's two things on the table here. If we kind of back test a little bit, just using the mouse, not even using software, and kind of take a look at how far EOG moves in the direction, in this case, the bearish side of the market, it looks like it moves roughly in $6 to $8 increments to the downside in this particular move. And you can clearly see here in the most recent move, it's already gone $8. So it's already gone in this move to the downside in the direction of these lower highs and lower lows. It's already gone its average true move. So in this particular case, well, Gani can definitely make an argument that the sector, energy sector, is bearish, and this stock is trading in sync or a correlation with the energy sector. That's a valid argument. But we now need to go to the next part of the equation and say, is this trade, is this stock right now a good trade? And a good trade is one that has the power pyramid, which we just discussed. But remember, the only reason we choose to accept risk is simply because the reward potential is likely for us to accept that risk, especially overnight risk with a swing trade. So if we do the basic math or the minimum required to set up a good idea, this particular idea does not have the market on its side. The market is going up, and I'll just put that in the video here so we can make it clear, right? The market is clearly going up, not going down. But the stock is bearish. The sector is bearish. So we kind of have one part of the argument in the idea that the stock is following the sector. It doesn't include the market, but it is a valid argument. But if we put the market into the equation and say it's fighting the market, if we put into the equation that the stock has already gone what it normally moves in a momentum move in the direction of the idea, that means that the reward potential on an idea at this particular moment, even though it makes sense from a sector perspective, it's not an A-plus trade right now from a risk-reward perspective. So remember that quote that I told you that I learned from one of a multi-seven-figure trader way back in the day, which is basically when you start to take break-even trades where you're risking $1 to make $1 at best, you become a break-even trader. And if your results are kind of back and forth, back and forth, back and forth, it simply means that you need to level up and understand that all we're doing is stacking the odds of risk-reward. Risk-reward is one thing to say, I could see it, but a bigger picture perspective of somebody who's leveling up their trading game now starts to say, I understand what 3-to-1 is, but what are the odds of me hitting the 3 for the reward to justify taking the risk on the 1? And in this case here, it's not justified, even though the sector is pointing in that direction. So while Gani does a good job of outlining reasons why to look at it, the timing is not great because of what the stock normally does, and the market is strong again this morning. So I do like the fact that recognizing not at the optimal entry, but what does that mean for the actual trade itself? Okay, so let's just say, for argument's sake, that Gani wants to put this trade on and justifies it by looking at everything that we just talked about, right? This is where now you have to put on your money manager hat, which, congratulations, you hired yourself. You're a money manager, right? We say that all the time, but it's true. You're managing your own account. You're a money manager. What is the right capital allocation? What is the right percentage of risk to go into this idea at this particular moment? Now, again, Gani says here, but I'm debating whether to enter now or wait for a pause. So we just kind of shot a hole in that, or gave some solidification to the better idea in this particular short sale. While it's in the direction of the bearish energy sector, the better idea right now is to wait for it to reset, which would be a pause before it pushes down again. So a little bit of patience. So there's two ways of doing that. You could look for what it normally does on a rally in a bearish move and get a ballpark figure of where you expect it to, or let it actually rally and then get a signal to sell short. But I want to finish up with, what if Gani is just so super set on putting this trade on, and we go through all of that stuff and risk reward and probability and sector versus the market and everything. In this particular case, there is no reason in the world to have bigger capital allocation on an idea that is not the best risk reward and not following the market, even though it is a bearish idea that can be justified based on its bearish but not necessarily good timing. So if I had to work this through where it's 1% of capital, 3%, 5% or more, this would definitely be on the lower end of capital allocation because the likelihood of reward for this entry is significantly lower. So what we just covered is the difference between reading charts, being great at technical analysis versus striving to be a trader. You want to be a trader. You do not want to be the greatest technical analyst in the world. Chart reading, technical analysis is not trading. It's finding ideas, but then putting together all the pieces for if we like it, is it the best idea? And what does that mean for risk, reward, capital allocation, and all of those things? That's the trading part of it. And that's what we just discussed. So again, great job posting this in there for review. That's a really big part of what we do in the community. Now we have an idea of, should we take it? Should we wait for timing? And if you take it now, which I believe we should wait for timing, wait for that pause before another push. If you decide to take it now, it would be on a very, very lower end scale of capital allocation. Okay. And look, I just want to say this again too, which is again, a big part of the coaching sessions. When you understand how to minimize unforced errors, you are now not forced to dig out of that hole in order to get back to break even. The less money you lose on bad ideas you should not be in the first place instantly makes it easier to be net profitable. Take that to the bank. There's no other way to put it. But the only way to know how to stay away from those ideas is to understand and have a roadmap in the first place, which says, that's what perfect looks like. Am I seeing that on the screen right now? The further away you get from perfect, you can consider the idea, but it means different capital allocation. Okay. All right. So James is looking at CrowdStrike. All right. CRWD. So this stock actually came back pretty good after the earnings. There's a couple of stocks, but I think really it was more PANW. The earnings gap down over here. It came back really, really strong. So again, we're moving up the power pyramid a little bit now where we're talking about industry group specific ideas, which now are up here. These guys aren't necessarily trading perfectly in sync with the market because PANW, CrowdStrike, and Zscaler are the three big ones in that group. So PANW, Zscaler, which clearly is still getting beat up ahead of earnings, and CrowdStrike right now. Now, could we make an argument that CrowdStrike is a good idea? Yeah, absolutely. You can clearly see the pushes and the pauses and resetting the optimal entry, right? Looks fantastic. Bullish gap, basically a 4 or 5 day pause, and you can see where we are over here compared to earnings. Now, the question is, with earnings coming out on Tuesday, June 4th, you have roughly about a week to get a head start on a winning trade at this point. So now this is a whole other layer of working your way into a new swing trade. Can we justify this as an idea? 100%. Clearly, the stock has rallied over the last several weeks. Like even if we just go to Friday's close, up 24, almost 25% in basically the last 5 or 6 weeks. That's fantastic, right? Absolutely a pause, resetting optimal entry. Now, the challenge here is we're actually up 2%, up $8 and change. Now, if I'm looking at this idea, I'm looking for it to break out of this box here, basically somewhere around this 350, 355 level. And now we're already beyond that, up at 359. Does that mean we can't take the trade? No, it definitely means we can. In this case, it's slightly different from what we talked about before, which is way beyond the optimal entry and already have used the majority of the average true move. If we kind of do a little bit of a back test here and do a quick down and dirty of what is this stock doing in a bullish move, we have a couple of different moves and basically go from, let's say, 290 to 317, so roughly $27, somewhere in that area. If we go from this pause over here, 320 to 342, so again, somewhere between $18 and $20 is the average move. So if we go, let's just use 20 as an example and start here at 343, we're already at 359. So we've used up a decent chunk of the average move, but let's not do it from inside of this box. Let's do it from a breakout of the box, which is roughly around 350. So now, again, we're not projecting, we're not guessing. We're basically saying, what does this stock normally do? So in that case, if we use 20, which is on the high side, we're looking at roughly 370. So if we're looking at 370, that basically means that there's roughly $10 left on this move, maybe 11 of what it normally does. So not quite too far from the optimal entry, but roughly half of it already used up. So James is looking at this idea and the stock being up $7 and change this morning, knowing that the average true move is roughly 20 and it's already done 10, then that would justify no more than a $3 stop loss for this initial entry before James would be looking to add as it moves in his favor, if it moves in his favor. So we're kind of shifting over just a little bit here on what the right risk reward is, and more specifically, what's the right risk based on the average true move, based on where the stock is trading this morning. So James, what I've been looking for this morning is you'd be looking at a little bit of a different entry here because of where it is pre-market, but reverse engineering the right risk based on what it normally does. And again, this is a really big part of trading that people miss, which is they just want to be a buyer without regard to what are the odds, how likely is it to make enough profit to justify putting this trade on in the first place. Now, again, we never want to limit how much we can earn on a position, which is why we have edge share price, which is why we have initial profit target, which is why we map everything out from start to finish, where nothing is left up to subjectivity. Nothing is left up to emotion. So when we kind of map out our trades and get down into where the swing trades are, there's a reason we map these out from start to finish. A reason that everything from start to finish is pre-planned, because it's based on the volatility. It's based on the probability. And if and when that stock moves in your favor, you're not guessing what you should do next. You're like, okay, great. I planned this out 5 days ago. It's doing exactly what I wanted to do. For example, in the trade CLS that we put on about $10 ago. We've already added to this position, and now the stock is actually up another 4% today. When you have that structured way of adding into a winning trade, you start to get, again, another breakout, right? How cool is that? When you start to get these trades moving in your favor, you blow the doors off the argument, hey, dude, I saw that guy on YouTube with a 90% win-loss ratio. It doesn't matter. Win-loss ratio, I challenge any one of those people bragging about their win-loss ratio and asking them what they actually made on the trade. In order to have those super high win-loss ratios, you're cutting your profit short. And it's quite stressful, quite honestly. Who wants to wake up every day saying, I need to be right every day? Nobody. I don't want to have any more gray hairs. I want things to be nice and planned, nice and repeatable, almost predictable. And that's why the game plan is mapped out from start to finish. So, James, we just mapped out that entire trade for you. It's beyond the optimal entry. It's absolutely bullish. It's obviously in a pretty good sector right now that's recovered, an industry group that's recovered from earnings. But there's not a lot left into the new move. So you're going to reduce the risk you're willing to take to start the trade and then plan when you're going to add to the position based on the way the stock trades and based on the way that we normally look at ideas. All right. So some other ideas for this morning, just kind of wrapping it up. Probably one of the most important things for this week, which we actually discussed in the daily ticker this morning, moving on all the way back up to the top of the research document today, is we are going to have some pretty good trading this week with conviction. You know, we kind of map out the week on the Saturday swing trade call and think through the coming week. And we say, are there any potholes that would make me kind of take a step back and not necessarily want to trade a little bit more aggressively, maybe manage my downside a little bit, maybe manage my position side a little more aggressively? Earnings, obviously, one of the bigger ways to really think about that, right? We just talked about that in a couple of stocks that have earnings coming out. But we all know that some of the bigger moves in the market recently have been from economic data and the lowering of the growth, which would allow the Fed to step in and say, okay, things have cooled off. We don't have to worry about inflation. We can start to bring down interest rates, right? That happened here and that happened here. So now heading into this week, Monday, Tuesday, and Wednesday, other than some stock specific with earnings, we're looking okay. So we should have some conviction and feel pretty good without seeing kind of black clouds over our head until Thursday morning. So what does that mean? That means that if you have swing trades heading into Wednesday night and you're kind of sitting on the bubble of profitability, you need to know that this is coming out, GDP numbers coming out Thursday morning before the market, and make a decision on that swing trade beforehand. Again, everything we do is all about thinking it through before we need to make that decision. That's what people do who see their account grow and grow and grow and grow with consistency. Okay, so GDP on Thursday and inflation data, more inflation data coming out on Friday. So Thursday and Friday, we are likely going to have some fireworks, pre-market volatility, and gaps. If you're on the bubble with the swing trade, keep an eye on that. You need to make decisions before that happens. I think the Friday number is going to be more volatile than the Thursday number because GDP, you see this little P over here, preliminary. Essentially, it's not the final number that tells us what happened the last quarter. They come out every month with a number. What really matters is this one right here because this is more inflation data and the Fed really focusing on inflation as they should. Inflation comes down, they can lower interest rates, corporate profits increase, and then we have another good quarter of earnings to trade off of, and everything is much easier when that's going on. So a ton of stuff to game plan for this week. Obviously, GameStop is in play again this morning, up 26% and change. Everybody knows my opinion on this. Great to day trade. Be super careful if you are swing trading it. You need to have massive discipline to trading this thing. I do not want to see or hear, hopefully, any stories about anybody getting caught off guard, not having discipline and buying it after this kind of a pullback. Really look in the mirror and ask yourself if you have the discipline to trade that. If you do, go for it. You really need to have experience to do that. You got to really think about where is your strength. Dell, big conversation around Dell, which we've already talked about. It's up again this morning. Dell is in the AI conversation. Dell is in the conversation around artificial intelligence and people needing their servers. Let's see if they come out with good earnings again. Now, I know a few people have Dell from lower levels. Just think about how you want to carry this through those earnings. I know you have a very big head start on the community, which is down here, 130 and change. You're now looking at nearly a $37, $38 profit heading into earnings, which is, I believe, after the close on Thursday. So just kind of map that out as well. Hefty Lefty, there'll be a link in the description, so you can actually grab that link. Some other ones, we got a price target raised on one of our swing trades, CLS, which we're getting some nice follow through on that one this morning. Another one of those stocks that we pre-marked out down here in the 40 level. We're long just outside of this level here, and now we got a very hefty swing trade after we already added to this trade again. So congratulations to everybody who took the trade, did not hesitate, and also added to the position. You're waking up on Tuesday morning in a fantastic, fantastic position. And Kava actually up this morning with earnings coming out as well. We had a conversation in Discord this morning about this stock. There's a lot of old school fast food places closing or going bankrupt right now with, I think, Red Lobster is actually at the top of that list right now. And these kinds of places are thriving. You know, whether or not they have a longer track record of profitability almost doesn't matter at this particular point. The market is liking what it's seeing. And by the way, keep an eye on that as well. CMG is coming up to a 60, is it 50 or 60 to 1 stock split? I believe it's this month. So keep an eye on that. If you like CMG and have been able to get involved at this price, this is going to be dramatically dropped when that stock split happens. Very similar to the Nvidia 10 to 1 stock split that was just announced recently as well. All right. So just to kind of recap the way we're looking at this week and really walking through, I'll be trading this week with conviction. An eye out for Thursday. Oh, that's supposed to be GDP numbers, and Friday's core PCE, personal consumption expenditures, which is obviously inflation data, to determine, as we just said, how we plan to hold those swing trades and swing trade management ahead of the game. Obviously, game plan meetings like this are where you want to present those questions ahead of it, and we can have a discussion on risk, reward, probability, and all those things heading into the next earnings report and these economic data. All right. A lot to unpack this week. Rounding it up, economic data later in the week. Heavy conviction until that happens. Let's go get them. Let's have an amazing, amazing week, everybody. Let's make it a good one. Another short week. Just keep an eye on that as well. All right, let's go make some money. Let's have an awesome day.